Yeah, I think maybe let's start with crowdfunding. It's something that we all read again and again. In my practice, it's not happening. You can make the argument that eventually, clients, coming to all of us here, on the panel, are different type of those reaching out to do crowdfunding. I would take Anthony's argument to say, what is the source of the capital in crowdfunding? And Sasha's point, how quickly can you underwrite? Are you sure that you can raise the finance to really execute on a project? You also can make the argument that in crowdfunding, people need to understand your project. And I think that's the second point, that I think eventually the approach to property needs to be a different one. Then I think it's more, reasonable question to answer. Are we moving away from, the loan as an instrument of financing to, a bond type of product? I think from a legal point of view, there's nothing wrong about it. I think the first thing that still is in the air, and eventually not many people take it as like, there's still some kind of, unwariness in, the back of our heads about, paper financing. I think we all have experienced that a couple of years ago. And even if there's a good situation in applying it, people would immediately pause for a moment and say, well, hold on a second, it's a bond, it's a paper, isn't it? So that's a stop that goes away, because if you think about it, you need to analyze it. First point, I don't see that much of an alternative to, corporate bonds, because only very, very few investors are able to issue them, and those probably do a very, very good job in issuing them, and that's the right, product for them. The majority of the, transactions we advise on are, out of the REIT business, the publicly listed business, even if they're significant in volume. And what I hear from my clients is that a bond is not the appropriate tool to finance it. It is the straight loan, even a structured loan, and then applying all techniques of senior lending, mezz lending on top of it. You need it and want it. But I think the loan product is the predominant method of raising, debt capital.
What is quite interesting is I attended a similar sort of discussion very recently, where there were some well-known US investment banks who are active in, I think we call it the CMBS market, RIP, because their view is that the CMBS market in Europe is pretty much going to be closed for a very significant period of time. In fact, one of the commentators I heard said, maybe for my grandchildren. And he was quite a young gentleman. So that probably gives a perspective. But on a more practical note, and taking Stephan's point straight on, where there is very significant activity in the traditional lending market is in the syndicated distribution. And so instead of distributing out into a CMBS model, most of the large underwritten loans are being distributed through a syndicated model now. And that is how the significant volume of growth is being accommodated through the major underwritten large senior loans.